Federal Reserve rate cuts about to ignite the next crypto bull run. Let's break down what's happening and why whales are already positioning for it. Crypto Wealth Daily here. Let's talk about the Fed, liquidity, and whether the next easing cycle becomes the spark for Bitcoin, XRP, and the broader crypto market. The Federal Reserve already cut once this year, but the big question is whether another cut happens in December or slides into early 2026. Inflation is still sticky, economic numbers are messy, and policy makers don't want to jump the gun. But here's the key takeaway most people miss. Every major crypto bull market in history has aligned with easier monetary policy. Money getting cheaper has always been gasoline for risk assets, and crypto is the highest beta asset class of all. Borrowing becomes cheaper, meaning capital flows more freely. Risk appetite raises investors start moving away from defensive assets. Money rotates into crypto, chasing higher upside potential. In other words, easing policy shifts. Psychology from preserving capital to multiplying it. That's why simple policy changes can spark aggressive upside in digital assets. The next catalyst is timing. Will the cut land in December or early 2026? How are markets positioning ahead of the announcement? And ultimately, which coin rallies first? That timeline matters, but either outcome favors crypto. If the Fed cuts sooner, risk-on sentiment could spike faster. If they delay, that delay becomes a loading period, letting accumulation continue quietly beneath the surface. Either way, the macro tide is turning, and crypto typically outruns stocks when the money printer warms back up.